What's up, everybody? Welcome to another episode of Quarterly Deep Dive. I'm Jim, and today we will be following up on yesterday's video with a look into Pinduoduo now that earnings have dropped for the second quarter of 2022. As I described in the last video, Pinduoduo is primarily an online agricultural marketplace company akin to an eBay or an Amazon, but focused primarily on agriculture. There's a bit more of an opportunity here than we might expect in America or the West, because the Chinese agricultural sector is dominated by small farmers who have historically had to rely on middlemen. I wanted to make a video on this company not only because they just happen to have earnings on the same date that I thought would be fun to make a video, but because there's been a lot of uncertainty with China right now, and I think Pinduoduo might prove to be a good barometer of what's going on in some areas of the Chinese economy for us in the West, considering the broader situation is maybe a little opaque right now. The short and sweet of it is that earnings definitely smashed analyst expectations. The street was looking for income of 38 cents a share and revenue of 3.54 billion in US dollars, or a decrease of 13.6% and 0.8% respectively year over year. Instead of declines, Pinduoduo delivered strong growth to the upside in both areas. They provide a net income gain year over year of 268% at $1,298 million and a revenue gain of 36% at $4,693 million, which is their highest result in both areas ever. They generated free cash flow in the amount of $2,829 million, a huge increase from the same quarter in 2021, in which they generated $1,060 million. So this is generally really good, but as always, I think it's a good idea to look at the balance sheet and see if there's something out of place that might explain this or hide something. And if there is, you can tell me, because there's several things going on here that I really like. First of all, in the aggregate, Pinduoduo has higher assets and lower liabilities than it did the quarter before. They own more things of value, and they owe less to creditors while earning more money, and that's what we want to see. Cash on hand is now $1.94 billion, coming off the quarter prior of $1.168 billion. That's great to have. That's something they can run on if they run into any difficulties that just fall out of the sky. Really safe place to be. You might be wondering to yourself how currency plays into all of this, and as the US dollar has seen a bit of a rise relative to the renminbi and other currencies since last May, and that shows up in their R&D, where they increased spending from 629 million renminbi to 662 million renminbi. But the value in dollars is actually slightly lower at $98 million this quarter compared to $99 million in the prior quarter. We have to keep in mind that this is a Chinese company, and US currency valuations aren't always one-to-one. As of this moment, staying flat in a US dollar valuation means growing in a renminbi valuation. So they're growing in their pond. When we look at all this together, it's pretty clear that Pinduoduo had a terrific quarter in which they emerged with stronger revenue, income, and a stronger balance sheet. This was despite what we know to be a slowing broader Chinese economy, severe COVID lockdowns over there, a housing crisis, and really bad international tensions. Pinduoduo themselves went into this quarter having made comments that they expected the situation might prove to be a headwind to their business and kind of slow it down. We know that the Chinese government has recently made overtures to the US about preventing delisting, in which they claim that they will allow US auditors further access to the books of Chinese companies. So if we take that at face value, we should have more reason to have faith in these numbers than we've ever had. You might not take that at the same face value that I do, but at any rate, it's something that definitely would lead us to at least believe that these numbers compared to past ones should be more believable if there's any discrepancy to be had. So when all this is taken into context, slowing Chinese economy and terrific results here, I think we're left with a pretty big question of what could have happened in the mix that could have caused Pinduoduo to keep delivering higher results. My take would be that policy which was feared to be a weight on this company actually proved to be a boon. Rather than causing people to turn away from online marketplaces for food, Chinese citizens probably looked more extensively for a bargain and used their time under lockdown more effectively to find ways to cut costs or sell products directly that they would otherwise find challenging to deliver through a distributor. Pinduoduo was in the middle of that, and also may have been the beneficiary of recent policies undertaken by the CCP to increase government spending and lower interest rates to prop up the economy. If we look at this action in the same way that we looked at the performance of Amazon, Pinterest, or Etsy in the US as the US economy shut down in 2020, there would likely be some similarities there. I personally don't own any Pinduoduo and don't intend to in the future, even despite this impressive result, at least in the near future. I think China and the US are still working through developing an understanding and a new phase of their relations, and there's still a great deal of geopolitical risk that I'm not willing to take with this. However, if you have a higher risk tolerance than I do, and feel confident the tensions between the US and China will not amount to much, or you own Pinduoduo already, I think it's extremely fair to say that this company delivered phenomenal results that far exceeded analyst expectations, and that if it continues growing at this rate, there's a very high potential that investors could be heavily rewarded for assuming risk at this stage. So that's a look over at Pinduoduo post-earnings. I hope you enjoyed it, and hopefully I'll be back for another video about another upcoming earnings pretty soon. This channel is just starting out, so if you watch this all the way through, please like and subscribe. My name's Jim, and this has been Quarterly Deep Dive.